Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, we're going to talk about interest rates. We're going to talk about inventory. We're going to talk about projections for 2025. And we're going to talk about the advantage of buying new construction versus existing homes. So let's jump right into it and let's talk interest rates. So there's a site called Mortgage News Daily. And what they do is they survey 100 different mortgage companies throughout the country. And what they do is they come up with the 30-year fixed average. Now, that 30-year fixed average as of yesterday was 6.85. Once again, 6.875 is where the interest rates are coming in at. Now, I know it's a little bit frustrating because we saw interest rates in September being in the high fives or low sixes. And it seems like since the Fed cut the interest rates or the federal fund rate, that interest rates did nothing but go up. But right now they are starting to drift down a little bit because now we're seeing interest rates ranging from 6.75 to 7.25. Now that all it depends on, credit scores, what kind of program you're doing, down payment, loan size, those type of things. So it's a range just to give you an idea of where interest rates are trending and where they look. Now, Realtor.com came out with their projections. So their projections for 2025, they're saying their average interest rate will be right around that 6.3 interest rate. So hopefully the interest rates will go down to the 6.3, especially since we're in the high sixes. Now, if we look at the average for 2024, that interest rate was 6.75. So the average were high sixes for all of 2024. Once again, Realtor.com is projecting interest rates to be in the low sixes, 6.3-ish%. Hopefully that will happen. Now, CME Group. CME Group is a site where they follow the Fed. It's a Fed watching tool. And what they do is they predict what the Fed is going to do at their next meeting. Now, the next meeting is December 18th. And the projection right now is a 72% chance that the Fed will cut rates another 0.25%. Now, we've already seen since September 18th, that didn't really help rates. Actually, rates went up, but hopefully with all these rates cuts, interest rates will start coming down. Okay, so the Fed keeps on cutting rates. Hopefully the interest rates for the mortgages will follow. So that's what we have, CME Group. Now, let's jump into inventory. What does inventory look like in Philadelphia? Okay, so we have, and this information is coming from Altos Research. Altos Research, what they do is they give a weekly projections of sales, inventories weekly. The difference between that and NAR has monthly numbers. Also, NAR on inventory will put pending sales and also available sales. And we all know if something's pending, it's really not available unless, a few, homes fall out. But for the most part, the pending aren't available. Altos just looks at homes available, nothing under contract. So for Philadelphia, and this is the week of 11/29/2024, we're looking at 2,501 home for available for sale in Philadelphia. Once again, that number is 2,501. Now, if we go back 1 year to see what happened in 23 for the same week, we were at 2,724 homes available. Okay, so we lost about 200 or so homes available. So inventory a little bit tighter right now. Now, if we look at days on market, once again, we're just looking at the week of 11/29, 77 days on market. And that's the median days on market. So let me just explain how median works or what that means. Median means that half the houses are selling faster than 77 days, and half the houses are taking longer than 77 days. So it's not an average, it's the median, okay? And the reason why we do that is because there's some outliers. You could have a house that's been on the market for 2 years, and if you do an average, then that will really, mess things up as far as how those numbers work. So we look at median. Now, if we go back 1 year ago, 70 days on the market. So houses are staying a little bit longer. Even though there's a little less inventory, houses are staying on the market a little bit longer. Now, median sale price. The median sale price is $273,000, median sale price. If we go back 1 year ago, that median sale price was $255,000. So there is appreciation in the market. Matter of fact, once again, Realtor.com, they came out with a lot of their projections, and they're showing appreciation for 2024 at 4%, at 4% for 2024, and the projections for 2025 to be at 3.7%. So everybody out there saying, hey, we're going to have a housing crash, we're going to have a housing crash. Well, with these projections, the appreciation's going up, not going down. Now, granted, it's not the 10, 12, 15% like we saw in 2021. They're more based on historical, but projections are still going up. Now, understand, real estate is local. Real estate is local. So in the north, inventory is tight. If we go south and we're looking at Arizona, Texas, Florida, there's a lot of inventory. Matter of fact, their inventory levels are above pre-pandemic 2019. So real estate is 100% local. We can never forget about that. These numbers are national numbers, where Realtor.com, and the Philadelphia numbers are obviously Philadelphia numbers. Okay, price cuts. How many houses that go on the market get a price cut? Right now, 41%. So 41% of all homes that go on the market get at least one price cut. If we go back 1 year ago, that was 43%. 43%. And median rent, $1,700. So once again, median means that they're half of the houses that rent are renting more than 17 or apartments, and half of them are less. So that's what median stands for. So now let's jump into new construction. And I had somebody who watched the show and mentioned that I keep on selling, home sales are depressed, but I didn't qualify the statement by saying existing home sales, which was huge. My mistake. So thanks for correcting me on this. Existing home sales versus new construction. Okay, existing home sales have seen a 2.5-year slowdown, and we're going to get into a little bit of those numbers right there. And then new construction has been surging. So when you put new construction with existing home sales, the sales are much higher and aren't depressed. One side, new construction is thriving, where existing home sales are slowed a little bit. Okay, so let's look at new construction, okay? Since 1983 to 2019, we are looking at 13% of all sales were new construction. So 83 to 2019, that new construction represented 13% of all sales. Now, if we look at 2024, that number jumped to 31%. So 31% of sales are new construction. So we can look at it another way. 1 out of 3 buyers are buying new construction. It's huge, 33%, almost are buying. So if you are an agent and you aren't looking at new construction, you're not talking, getting super familiar with communities, seeing if, they're willing to pay a commission, those kind of things, you're losing basically a third of the people who are buying homes that you're not even looking at. So that's huge. Also, we're looking at completions of new construction. 2024, we're looking at completions of approximately 1.6 million. And going into 2025, that number is going to a little bit less, about 1.1 million. So there's a lot of homes being built. Now, why are people buying, new construction at a higher rate? Well, number one, inventory. Inventory is an issue. If there's not homes for sale, well, you have to look at new construction. Okay, so existing homes, there's not as many available, especially in the northeast, Pennsylvania, that kind of, New Jersey, so it's really tight. So people are gravitating towards new construction. Okay, and since the pandemic, new construction has been surging 26%. So they're building 26% more houses than pre-pandemic. Okay, 2017, 18, 19. Now it's up 26% because people are needing a home and they're going where the inventory is. Now, what is another reason why people are gravitating towards new construction? The biggest reason, the number one reason, is builders are able to do buy downs. So you will see, depending if you're going to a Toll Brothers or D.R. Horton, they're offering money. They're saying, hey, we will buy down your interest rate. And we know that if interest rates are in the low sixes or in the fives, that really moves the needle. So builders are out there giving people the 5%, low 6% interest rates, whereas you buy an existing home, you're paying maybe 7% interest. Okay. Also, what sweetens the pot a little bit, we already mentioned inventory, but maintenance. A brand new home, there should be no maintenance, for the next 5 to 10 years. Very little. You can customize, not all, but some projects you're able to customize. Insurance a little bit lower, and if you're in Philadelphia, a 10-year tax abatement. So there's a lot of reasons why people are starting to gravitate towards the new construction. The two biggest reasons, that's where the inventory is, and builders buy downs, making it much more affordable. Hey, if I'm getting a 10-year tax abatement, I can, pick out, what I want my kitchen to look like, and I can get a 5.5% interest rate. That is pretty appealing, to a home buyer. So if you're a realtor out there, do not overlook new construction, and really be an expert and really, do your research to find out where the new construction is. And maybe you can start having some clients, look at some of those homes to increase your inventory pool. So that's a real quick analysis of the Philadelphia market. And I hope you enjoyed the show. I hope you took some valuable information. And remember, this show is everything real estate. Please follow the show on Facebook, Instagram, subscribe below, have great guests, give some likes. It really helps out the show. Please subscribe, really helps out the show. And most important, well, not most important, but super important, leave your comment, because it's super, super, super valuable information to really distinguish between existing and new construction. So I do appreciate that comment. Always looking for comment, and also topics to cover in the future. That's the Real Estate Show with Pat Lopez. Hope you enjoyed the show, and I'll see you next week.